This episode of the My Latin Life podcast is brought to you by Language Blend, the new best way to learn Spanish. Language Blend focuses on what you actually need to live and get by abroad with daily one-on-one lessons, a dedicated texting partner. It's like living in a Spanish-speaking country without ever leaving home. Go to languageblend.com for more information. Welcome back to another episode of the My Latin Life podcast. Since 2014, My Latin Life has been your trusted guide to traveling and living in Latin America. My guest today is John Richardson. He's a lawyer for U.S. persons abroad. He's an expert in American tax law based in Toronto, Canada. This episode is going to be jam-packed with information that would otherwise cost you large amounts of money. I think John charges $575 for a 1-hour call with him. So this can be a value-packed episode. Absolute expert in his field, Mr. John Richardson. Welcome to the show.
Well, hello there. Looking forward to our discussion.
Absolutely. I feel like my intro did not do you justice. Do you want to give a bit of a background on who you are, John?
Oh, I think you pretty much summed it up. That's what I do. It's not who I am. You can judge who I am, I guess. But what I do is I help U.S. citizens and green card holders, in the case of U.S. citizens who are afflicted with place of birth anxiety, solve their problems, or at least mitigate them.
And I think the way I originally found you was that you're involved in the accidental American movement a little bit, and sort of the fight against citizenship-based taxation, which are kind of two different movements, but kind of one and the same. Do you kind of want to explain what an accidental American is?
I'll give it a try. I don't think anybody... Accidental American is somebody you recognize when you see it, but it's hard to define. First of all, the term accidental American has no existence in any U.S. law whatsoever. It's generally understood to be somebody who is either born in the United States with no economic ties to the United States whatsoever. Generally, I think these are people who are understood to have, left before the age of majority, usually with their parents, or they're people who were born to a U.S. citizen outside the United States and, decided they were a U.S. citizen, from that point on. I would add that there are a few accidental Americans who are happy with their American citizenship. If somebody calls himself an accidental American, chances are very, very good that they are experiencing some issue somewhere with the problem of being an American citizen.
And my understanding is that in Canada alone, there's probably upwards of 500,000 accidental Americans by one metric, where it's just Canadians where one of their parents are American. And even though maybe they were born in Canada, they have the right to U.S. citizenship, or the U.S. government would consider them a U.S. citizen, even though they don't have an American passport, they've never lived there, they have nothing on paper technically tying them to the States, except the fact that their parent was born in the States, something like that. Does that ring a bell?
I think that number is probably low, if you
Mm.
put it that way. I mean, years ago, I used to hear a statistic that something like 80% of the population of Canada lives within 100 miles of the U.S. border,
Hmm.
which is yeah, possibly true. Okay, but it's more or less accurate, I think.
Hmm.
Partly because Canada is not particularly well populated, 100 miles from the border if you go north anyway. But there's a long history of cross border mobility, so you're going to have a lot of people who are entitled to American citizenship. I suspect that a very high percentage of them probably don't acknowledge their American citizenship. They just don't consider themselves to be American.
Hmm. And so for people in that situation, they grew up in Toronto, they grew up in New Brunswick. One of their parents is randomly from Minnesota, but they have no ties to the States. They don't have a passport. They don't have a report of citizen abroad, CRBA, I think it's called. Would you recommend those people actually go formally renounce their US citizenship, or just continue kind of like living and existing in that gray area and hoping nothing comes of it?
Um, I have helped a lot of people in that category renounce U.S. citizenship over the years. I will say this, that I don't think it's a hugely urgent issue for them for two reasons. Okay, the first reason is that nobody, it's really the U.S. place of birth, right? That's the problem. It's like the
Hmm.
scarlet letter sort of thing. Once you get that, there's going to be trouble once people find out about it. Now, interestingly, in Canada, passports are not a common form of identification for opening bank accounts and that sort of thing. So I think there's a very, very large number of people in Canada who probably are entitled to American citizenship, have no particular consciousness of it, because there's nobody at a bank who says, "Hey, we see you were, uh, you're either born in the United States or you, at some point, opened a bank account, or any of these things." Anyway, those people are, I think, largely invisible.
Hmm.
But they do have one tremendous advantage if they want to be a dual citizen. That is that they're dual citizens from birth often. And that really makes them a preferred kind of U.S. citizen. I mean, anybody who thinks that U.S. citizens are equal obviously doesn't understand U.S. tax law or U.S. citizenship law very well. Because at some point, most American citizens living outside the United States are probably going to consider renunciation. And if you're a dual citizen from birth, a dual Canada U.S. citizen from birth, and you meet various other requirements, you can actually renounce U.S. citizenship and not be subject to the exit tax.
Hmm.
So this is huge, and it
And so why wouldn't they be subject to the exit tax?
well, so the people who are subject to the exit tax are called covered expatriates, and usually the problem is they have more than $2 million of net worth. And anybody who's lived in Toronto would know that you can do that just basically through a house and a pension. But there's an exception to the exit tax rule, and that is if you're one, a dual citizen from birth, two, you're still a tax resident of the country of second citizenship,
Hmm.
three, you haven't lived in the United States for more than 10 of the last 15 years,
Hmm.
and four, you can actually certify tax compliance. Then you don't have to worry about accumulating
Wow,
too much wealth.
that's
So
huge. That's
it's
huge.
unbelievable. I mean, it's a preferred status of citizenship. Um, I mean, it's really shocking, right? When you think about how the United States essentially discriminates against U.S. born people who were not fortunate to be born to
And would that be even dual citizens that claimed their U.S. citizenship and got the passport, but just never lived there? Would they be exempt from the tax as well, or
Yeah,
only the
a
people?
slightly more specific example. Which kind of U.S. citizen? You mean somebody who was born in Canada to
Yeah,
U.S.
I know we're saying Canada a lot in this podcast because you're in Toronto and I may or may not have relationships with Canada, but when you extrapolate this to half our audience is American, and so they're deciding where they maybe want to raise their kids. And one thing I've actually talked about a lot in the past is there's I've talked about this exact same thing about how the best type of American is an American born outside the United States because it doesn't say your place of birth being the United States on your passport or on your other documents. And so you can sort of get away with not appearing American when it comes to opening bank accounts and things like that.
No, I think that's absolutely correct, and I think that people who are thinking in terms of family planning, I mean, I'm quite serious about this. I think that one of the greatest gifts in this turbulent world that you could give your children would be the gift of dual citizenship. So, what might that mean? I mean, there are people I understand. I don't know any of these people personally who are American citizens will have their children born in Mexico,
Mm-hmm.
or possibly Canada, etc. And I think that in the last century, I don't think citizenship was a big deal, right? But in this century, it is a huge deal, right? Because it opens doors to mobility and things like that. And if you can get your kids dual citizenship right from the get go, you're giving them a tremendous options. I mean, you could make $1 billion in the United States. If you're born a dual Canadian citizen, move to Canada, uh, etc., and figure out how to run your life so you could expatriate and not be subject to that exit tax.
Yeah, very
I mean,
cool.
this stuff is really opens the door to many planning opportunities. But I don't know how long this is going to go on because I personally, I mean, anybody who understands U.S. tax will understand that it's quite possibly the most unjust revenue system ever created. I mean, it has like 7 or 8 different tax systems, etc. But I think that this is, I sort of see it as a loophole. I don't personally see any reason. Let me give you an example here. So let's say we have two identical billionaires. Okay,
Mm-hmm.
two identical billionaires.
Okay.
One of them was born in the United States without dual citizenship. Okay, he had the misfortune to be born to parents who traced their lineage right back to the American Revolution.
Poor
Okay,
guy.
they were such important, good Americans that they were pure Americans with no taint of any other citizenship. Okay,
Straight off the Mayflower.
right
Okay.
off the Mayflower, exactly. Okay, actually, there is such a thing as the Daughters of the American Revolution. Why don't we make it a Daughter of the American?
Mm-hmm.
All right, now that Daughter of the American Revolution has a friend was born, next door the same day, but that person's was born to a Canadian citizen parent and therefore acquired Canadian citizenship at birth. Okay? Now, the one with the dual citizenship is unquestionably a preferred American in the sense that there are clear tax advantages just based on the citizenship. Okay?
Mm-hmm.
The one with American citizenship only, if he or she were to try to expatriate, could never do it, right? Without being hit with massive exit taxes that, frankly, are getting to the point they're so punitive that it really is, creating sort of a Berlin Wall. So I am beginning to see U.S. citizenship as basically a caste system.
Okay.
I mean, another interesting opportunity. This isn't dual citizenship from birth, but it is an interesting opportunity. We were chatting about residency by investment, citizenship by investment.
Hmm.
One of those fantastic programs, I think, available to Americans is to just send their kids to the University of Toronto or somewhere for university.
Right.
They can get a postgraduate work permit after that, leverage that into permanent resident status and then Canadian citizenship. It's unbelievable. It's unbelievable. And, this can be done for less than the cost of a comparable U.S. university.
Hmm.
I mean, why wouldn't you do it? Why wouldn't you do it?
Right, right. And if you have dual citizenship with Europe, you can go to university in Europe basically for free.
That's correct. That's absolutely correct. I think these citizenships are becoming more and more valuable. Now, to be clear, I think the U.S. citizenship is very valuable. Okay, I mean, it's on a par with most first world citizenships. It's just that because of the tax and regulatory regime, it's almost impossible for a U.S. citizen to move outside the United States permanently and make a life in that other country, where you're actually doing your retirement and financial planning in that other country, because this is where you run into the tax problems.
Yeah, yeah, John, it's crazy. I almost have to put a pin in like three separate topics. So we could talk about being a US citizen abroad as a digital nomad, which you told me offline is actually a good situation to be in, versus being a US citizen abroad as an expat or retiree long term, which can get definitely a little bit hairy. So that's one topic.
Retiree, that's a third, that's a separate category. Okay.
Hmm.
I mean, maybe if you want to tee it up, I mean, we can talk about each of those three categories and how they're very different.
Yeah, yeah, absolutely. And by the way, I wanted to ask real quick because I was just curious. What's your personal situation? Were you born in Canada? Were you born in the States?
I've lived almost all my life in Canada, but I was born in the States. I probably would qualify as an accidental American,
Okay, cool.
whatever that means, right?
Yeah,
But
so I sorry to cut you off. Good.
yeah, whatever that really means. The problem with the accidental American movement, which I'm not, I'm well aware of, and I've worked with them. I don't particularly associate with it, though. In the sense that you know, see, with the accidentals, what they're trying to do primarily is just argue they shouldn't be subject to these U.S. laws because they just don't have sufficient ties, right, to the United States. My view is that applies to far more than the so-called accidental Americans, right? So, I mean, my view of this is much broader, and I think that the focus on the so-called accidental Americans obscures the overall issue, which is that the U.S. should not be uh, essentially imposing worldwide taxation on people who don't live in the United States, whether they're these accidental Americans with
Hmm.
really significantly fewer economic ties than others or not. In other words, I think the whole so-called citizenship taxation regime is wrong. Not
Yeah.
that.
Do you want to just quickly, before we jump into the nomad versus expat versus retiree, which I think is a good flow, but do you want to just quickly tee up? I think most people know this, so you can do it pretty fast, but what is citizenship based taxation? Why is it unique to the United States? And actually, maybe like when did this come about? Because I know you've talked about the history of how this happened as well.
Um, well, let me talk about what it is. I think that's the bigger issue. I mean, it's been around long enough, so it doesn't really matter.
Okay.
But the history there. But I think what's important is what it is. Now, first of all, we're having a conversation using the term citizenship-based taxation, which is completely meaningless. It's a neologism, like accidental American. Meaning just sort of a made-up word. neither has any particular meaning. So let's talk about what it really is, okay? What citizenship taxation really is claiming somebody as a tax resident, meaning subject to the tax rules, based on the circumstances of their birth and not on the circumstances of their life.
Right. So it's like birth-based tax residency.
Sure, something like that, okay?
Uh-huh.
Now, every other country in the world, all right, defines tax residency, which is what people want to avoid, right? I mean, that's part of what a digital nomad usually is, okay? Defines tax residency in terms of the circumstances of life, meaning where do they actually live? Where do they make their money? Where do they use government services, right? That's generally referred to circumstances of life taxation.
Mm-hmm.
It's called residence-based taxation. It's what the rest of the world has. The United States has circumstances of birth taxation, right? Not life. Now, what does that mean? Okay, what does that mean? What it means is, okay, and it's very important to understand this. What what tax residency based on birth means is that the United States uses that attribute, right? That we're going to tax people based on being born in the United States as a way to actually impose full taxation on people who live in other countries. Okay? Now, let me expand on that just a touch, okay? Because again, now where I'm going with this, the only meaning that birth-based taxation, citizenship-based taxation has contextually is that it allows the United States to walk into other countries and claim the residents of those other countries as U.S. tax residents. All right, that's what it actually means. Now, this can be, a lot of people, try to confuse this or just confuse it, but let's look at it this way. Every country in the world taxes people who reside in the country, including the United States. Agreed? All countries. You live in the country, you're going to be subject to worldwide taxation, number one. Number two, all countries impose taxation on income sourced inside that country. Number two, only the United States extends its tentacles into other countries and says, you know what? We see these people living in your countries, but by God, because they were born in our country, we're going to claim your tax residents as our tax residents. So you see, that's what citizenship taxation really means.
Mm-hmm. Mm-hmm. I think every American digital nomad listening to this is nodding their heads right now.
I'm sure they're nodding their heads, but they have it easy.
Yeah, so let's get into that.
Let's start with a digital nomad. Actually, let's start with the retiree abroad.
Okay.
Let's start there. We'll move
because our audience is probably like average, I don't know, 28, 30, 35 years old. So we'll let them know what they have to look forward to as they retire.
No, there's a reason for starting with this, okay? The reason is this.
Right. Start planning now.
Abroad. Okay. When we think about taxation, we think about taxation of the person and taxation of the source of income. Retirees abroad are people who are moving out of the United States to live off their U.S. source pension, Social Security, what have you, in other countries. They generally do not have income sourced outside the United States. So if they move outside the United States, really not much changes for them at all. Okay? They just live outside the United States. They still pay taxes in the United States. They still file the same tax returns. And usually they're either not paying taxes to other countries or the fact that their income is sourced in the United States means they don't. So they don't really have any problems. They don't see the U.S. birth-based taxation regime to be any problem because they see their situation only in terms of income sourced in the United States. Okay,
the American retirees abroad,
and that is why they generally don't get excited about this. and often are actually hostile to change in the tax regime. Okay. Now, let's move to your digital nomad. Now, I think we first need to agree on what a digital nomad is. My understanding, and I'm not one of them, okay, so my understanding of digital nomad is somebody who moves to another country and works remotely, generally not making their income in the country they're working from, okay, although they may be. But the point is simply this, that they move, say, from California,
To
they'll
Mexico.
go to, say, Portugal. Portugal has a new digital nomad visa, so we can
Yep.
use that as an example.
Okay.
Now, they're in a not bad situation at all. And I want to compare an American to a Canadian in this situation because they're arguably very different, okay? So remember that America, okay, claims as tax residents anybody born in the United States, all right, or anybody who a green card holder as well. Okay, but let's not complicate it. So, the fact that they go to Portugal or whatever, that doesn't mean anything in terms of how it affects their U.S. tax situation at all. However, the U.S. Internal Revenue Code has source rules that basically say just that. Where is income sourced? And one of the things it says is that the income is sourced in the place where the work is done. So let's say they get a digital nomad visa for Portugal. They go to Portugal. They do their work in Portugal. And because they're doing their work in Portugal, that is classified as foreign income under the U.S. rules.
Mm-hmm.
Now, they can manage the foreign income, all right, in one of two different ways. One thing that some of them will do is they'll use the foreign earned income exclusion, which basically means if you have a tax home in another country and you either really live there or you spend enough time outside the United States, you can exclude up to, you'd probably know this better than I do, but I think it's around 120,000 US dollars.
Yep.
In any year, and that's indexed to inflation. And, that's not bad, actually. That's not bad. I suspect that a lot of people make far less than that. And, that makes their tax situation relatively simple, okay? Unless, now we'll use Portugal as an example. Now, my understanding of the digital nomad visa in Portugal, and I may be wrong, okay, but if I'm wrong, let's imagine this is the case because it's certainly true for other countries, is that the digital nomad visa does not give you an exemption from Portuguese taxes necessarily, meaning if you meet the requirements for tax residency in Portugal, which I think is 183 days, you're going to be subject to taxation in Portugal as well. Now, let's look at this from the point of view of the American from California. Well, let's say the person uses the foreign earned income exclusion, and then the person would just pay taxes in Portugal, right? Okay, without having to worry about the U.S. taxation, as long as we're dealing with earned income, all right, to keep it simple. Or, the person could include the income instead of exclude it. The foreign earned income exclusion excludes the income. They could include it. And then, of course, what they're going to do is they're going to use tax paid in Portugal as a credit against any U.S. tax owing.
Yep.
But for digital nomads, generally speaking, I think that things go fairly smoothly. And, if we were to compare an American to a Canadian, now what's interesting about this is that Canada, of course, defines tax residency in terms of circumstances of life like the rest of the world. But if you're going to sever tax residency from Canada, you're going to be subject to departure taxes and stuff like that, all right? So it may be that a digital nomad actually takes the position of severing tax residency from Canada, or maybe not. But it's a different issue. The American would not sever tax residency from the United States because the American can't, okay? All right, so that's sort of the situation from the point of view of the digital nomad. Probably all your listeners are well aware that any American citizen living outside the United States has very penalty-laden and extensive reporting requirements for anything that's foreign to the United States. Okay, so that would be bank accounts, brokerage accounts.
The F
Uh,
bar.
yeah, F bar, sure. Up until 2017, it was common for Americans to create foreign corporations that were controlled foreign corporations, uh, basically to avoid the self-employment tax. All right, which forgot to mention that the self-employment tax still needs to be paid in America, regardless.
Hmm.
Um, but they're not going to be able to do that anymore because changes in the 2017 law made that either not worth it tax wise, but certainly too expensive from a compliance point of view. But
And so
still,
now people do dividends and distributions instead of like uh, self-employment income.
um, well, that's always an option, right? But you have to accumulate the income in the corporation to do that. And in order to do that, you're going to have to deal with the whole guilty rules and things like that. So, my general view of this is that unless people are making an awful lot of money, I don't think they should get into creating corporations outside the United States.
Okay.
But I do acknowledge that's my opinion. There are certainly people who would disagree. But if you really dig, I suspect there are also people who make their business filling out 5471s, which is the very extensive reporting requirements for Americans with
Okay.
foreign
Yeah, yeah,
corporations.
yeah. Yeah, so if you're enough money, maybe go offshore. Okay, and so just to kind of keep things on track, so digital nomads can leverage the foreign earned income exclusion. They're probably not tax residents anywhere else. If they are, they can do what's it called, foreign tax credits to taxes paid, and it basically equals out. That's the idea, and can actually be very beneficial.
It can, but remember the self-employment taxes, right?
Hmm. Okay,
You that's another big issue because they're high, right?
because that's like 15%, I
It is
think.
15%. It's high.
Yeah.
However, okay. However, um, it is an investment in Social Security credits, right?
Hmm.
And that's not a bad thing. I mean, it may not seem like a good thing for a lot of people who are digital nomads, but over time,
Right. The more you pay into the system, the more, in
that's right.
theory, you'll
You
eventually get
start
out of it.
accumulating, at least what is at present. I mean, the U.S. Social Security system is incredibly lucrative relative to things like Canada Pension Plan, and it's not only the benefits that the payer gets, but there's all kinds of residual benefits, spousal benefits, and things like that. I mean, it really is extraordinary.
What makes it better than the Canadian pension system?
Oh, uh, the ability for spouses and that to get very significant payments based on being, just based on who they're married to, et cetera, or even who they were married to. Well, let me give you an example. I mean, I was speaking with somebody last week, an American citizen living in Canada who was married to an American in the United States for, I think the statutory requirement is 10 years.
Hmm.
And they've been divorced for a number of years, and she's entitled to a very good percentage of Social Security payments
Damn.
just by just by virtue of the marriage. Okay, and by the way, this is not at the expense of her ex-husband at all. This is just the way the system works.
Hmm.
And I mean, this stuff is really amazing. It's not well known, but there are a lot of people in Canada who are married to Americans who are entitled to U.S. Social Security benefits.
Hmm. Okay. Okay. That's pretty sick. I definitely can see how the U.S. Social Security system has some good payouts. I mean, they're racking up some multi-trillion-dollar bills over there, so that's good. So digital nomads not in the worst situation is basically what we need to know, which makes sense. They're relatively optimized, kind of jumping around the world. Let's move on to the expat category, which might be your couple with your married couple with two kids and a car and a house, and they're living in Canada, or they're living in Spain, or they're living in Mexico, to keep it on the Latin
Yeah.
America
Okay.
train.
Well,
So what? So this is like the worst situation to be in, right? You're not
it is,
retired.
but there's still. I think we need to be more specific. There's two categories here.
Okay.
The word expat is not the same as the word immigrant. Okay, and I want to distinguish them. An expat is generally considered to be somebody who, has American roots. Their financial center of gravity is probably the United States, and what they do is they move out of the United States, for 4 or 5 years or something. I mean, there's a lot of American financial people in London, for example, right?
Sure.
Now, these are people who are not likely at all, okay, number one, to try to arrange their money management, their investing, their retirement planning outside outside the United States. In other words, they're not going to start using the Canadian tax system or the British tax system, to invest in RRSPs or ISAs in the case of it. And in other words, they generally avoid non-U.S. investment schemes, non-U.S. assets, etc. They keep their lives centric in the United States. They simply move their bodies outside the United States, usually for employment or something like that. Very often, their taxes are done professionally, by other people, etc. And they may notice some irritations like FBAR or possibly 8938, depending. But that's really the extent of it. Okay. Now, the reason is, and this is very important to understand, is taxation is no longer about taxation except peripherally. Tax codes are now the rules that people use for retirement planning, investing, and all kinds of other things here and there. But if somebody leaves the United States, for a short period of time, say under 10 years, they keep their financial center of gravity in the United States. They're not setting themselves up for the kind of, punitive confiscatory taxation that would apply to people who leave the United States at a relatively young age and completely integrate into the tax system and retirement planning system in another country, right? I mean, these are the ones who are finding it impossible. These are the ones who are basically forced into renunciation at this point because what the tax system in, say, Canada giveth, uh, the U.S. tax system will take. Now, let me give you a couple of very simple examples that are absolutely, absolutely brutal. Um, you may or may not know that it is very common for people in Canada to carry on businesses through Canadian-controlled private corporations. In fact, a large number of professionals do. And for the self-employed in Canada, these Canadian-controlled private corporations really operate as private pension plans. Okay, and that's why people do them, right? It's to get the benefits of tax deferral. Now, the I'm going to make one very technical comment here because I don't know who's listening to this, but under the entity classification rules, Canadian controlled private corporations are what are called per se corporations under the U.S. rules, meaning they're always treated as corporations. Now, the effect of that is that they're subject to, a battery of rules that while the Canadian tax system is giving this opportunity to create a private pension plan, the U.S. tax system is attacking that and completely destroying it. Okay.
Mm.
So these kinds of people are in the position where they basically, have to choose between being able to plan for retirement and being an American citizen. And really, the choice is pretty easy. Okay, at that point, I mean,
And basically, effectively, they cannot have these Canadian corporations because it's just too much of a burden?
They can have them, okay, but they're going to have to deal, first of all, with the filing requirements and the regulatory stuff, which is very expensive. But it's not going to be easy for them, okay, to use those things in the way that they are intended to benefit other Canadians. For example, a few years ago, and this is what I was told, I don't have any independent knowledge of this, but instead of giving doctors a raise, from the government health plan, they gave them the opportunity to create professional corporations. Okay, and this is a relatively new thing. The point is that by being able to run their medical practices through a medical corporation, which is really just a Canadian-controlled private corporation, it's like giving them a pay raise because they're able to retain a lot more of their money. Okay,
Mm-hmm.
but for those who are American citizens, they're going to run head on into the whole Subpart F guilty regime, etc., which makes it very difficult. That's a very common but perhaps harder example for people to conceptualize. Let me give you a much easier one.
TFSA?
Yeah, sure. I mean, I was counseling a family about a year ago. They had the kids there. One of them had, was like 17 and a half, and just couldn't wait to turn 18 to have his own TFSA. Which I think is a good thing. I mean, I think the TFSAs are obviously good things, but it's an example of a tax deferred or advantaged Canadian, very popular investment instrument that will be attacked by the U.S. tax rules. Right
Mm-hmm.
now, it's not as simple as they can't do it. Okay, I mean, I wrote an extensive blog post on this recently, showing people how they could use TFSAs, but it's one more example of how when the Canadian tax system or the British tax system giveth, the U.S. tax system taketh.
Right.
So,
And the
bottom
reason
line,
that is because Canada or whatever country, I know we're using the Canada example a lot, but you can sort of extrapolate to any foreign country. But Canada says something like you can save and invest 10K tax free per year, and it helps Canadians build a bit of a nest egg and helps basically incentivize them investing in the Canadian stock market and stuff like that. But my understanding is the US does not recognize this as a tax-free vehicle, and then the U.S. will want to tax the capital gains from that derive from this account, even though Canada wasn't going to do it. Is that kind of
yeah, that's
my?
right. But it's not just taxable, capital gains. They're gonna tax any income earned inside it. Okay, or at least
Yeah,
subjected to taxation. Now, uh, you know, TFSAs are still very helpful for people at different stages of life, right? Because if you don't have a lot of other income, etc., I mean, you can still make use of that because you wouldn't end up paying the U.S. tax. But the basic problem is that things that are normal and work in Canada are toxic for Americans in Canada. But I mean, the worst of all is middle class people. I mean, investing is hard even for sophisticated people, but middle class people, small amounts of money, are inclined to use mutual funds and ETFs, right? But because these are, from the U.S. perspective, foreign, they deem them as being PFICs, which is a nasty word for extremely confiscatory taxation and reporting. In other words, it completely destroys it as an investment vehicle. So, where that leaves Americans in Canada is that they have three ways, I think, that they can responsibly invest. Right, the first is real estate. Right, okay. Uh, by the way, America will tax the capital gain on the principal residence. Okay,
which Canada does not.
exactly. Now this is huge because anybody who lives in Canada knows that part of retirement planning in Canada is usually, well, very often for people, right? This idea of eventually selling a house with a huge capital gain and downsizing. That's not available to Americans in Canada. And this is a big problem because, this is part of what it means to live in Canada. It also makes Americans in Canada, in a sense, permanently downwardly mobile people if they move, right? Because Any gains above a certain amount are subject to U.S. taxation, which erodes the money that you would use to buy another house, right? So, I mean, this is a problem. I mean, I've talked to all kinds of people who will renounce just for this reason, because they want to sell their house, right? And they don't want to lose a significant part of it to U.S. taxation. And, you live in a city like Toronto, um, the average house price is probably north of $1 million, and in certain parts of the city, far higher. So there can, and if people own these houses for a long time, I mean, not everybody moves every other year to avoid,
Yeah, no, I get it. So most people, if they've been living in the same house for 10, 15 years in Canada, or even like another high growing market in the world, I don't know, somebody name something, but
anywhere.
Singapore or whatever, and they're sitting on a $500,000 capital gain that would not be taxed in Canada or Singapore. The U.S. wants the capital gains tax on that, which is what, I don't know, 15%, and
23.8%.
ooh, so
20.8.
call it 25%. So if you have a 500K capital gain, the U.S. wants 125K of that.
Yeah, that's exactly right. And I would point out that part of that tax that we're talking about is what's called the net investment income tax, which is a real scam because the way it's written into the Internal Revenue Code, that's a tax you cannot use Canadian taxes to offset as a foreign tax credit, right? So essentially, it needs to be seen as a charge of 3.8% on investment income earned by Americans in Canada. I mean, let that sink in for a minute, right? A tax of 3.8% on investment income earned by Americans in Canada. And that's in addition to the Canadian tax. Because the way it's written, remember we talked about foreign tax credits? All right, you cannot use tax paid in Canada as a credit to offset that 3.8% tax. Now, listen, that doesn't sound like a large number, but it's a very large number. It's very difficult. It is very difficult. If you're not a retiree abroad or a digital nomad, or an expat who's on a company plan for a few years, it is very, very difficult for American citizens to survive outside the United States while they're integrated into the tax systems of other countries. And I've only given you some examples.
Yeah.
This is aggravated by the uneven treaty network. In Australia, for example, everybody's required to have something called a superannuation, which basically the U.S. taxes, but it's tax free in Australia. And this is a gigantic problem because this is a pillar of how people save for retirement, right? But people with a U.S. birthplace living over there are going to have this huge problem. And Australia has a very, very old, antiquated tax treaty that in no way, that was never changed, okay, to try to deal with any of this stuff. So, let's say that somebody were to come to you and say, well, I don't like things in the United States. I don't like this or that. I want to go live somewhere. How am
Right.
I going to be taxed if I live outside the United States as an American? Well, the right answer to the question is, I don't have a clue. It depends what country you move to. Okay, because there's all kinds of different rules, and we haven't even gotten into things like totalization agreements, which in some countries will exempt people from the Social Security, self-employment taxes we were talking about. If you're in Canada, Canada has a totalization agreement. You won't pay the self-employment tax to the U.S. Other countries don't have that kind of agreement. Israel, I think, for example, you will. It's so incredibly complicated and obscene that people just throw up their hands and they feel that they just can't deal with this. Life is just too short to be an American outside.
And so have you renounced, or are you sticking with it?
Well, I have been involved in a lot of advocacy for a lot of years, okay? And it's very, very difficult to be involved in advocacy if you're not an American citizen.
Hey, everybody. Hey, everybody. Quick break from the podcast to tell you about Language Blend, the best new way to learn Spanish. Language Blend was co-founded by Jake Nomada, friend of the podcast, decade of experience in Latin America. And Jake and his team, they put everything into this program that they wish they had in terms of how to level up quickly with your Spanish language skills. Because the faster that you can get conversationally fluent in Spanish, the better the experience that you're going to have in Latin America. So go to languageblend.com for more information.
Look, it's a difficult problem, okay? It really is. And I think that if people really understood it, uh, I think I think that this would become a much bigger issue. But there's a tendency uh, for people to define the problem in terms of how they experience the problem, which is reasonable. But that's a problem in getting change, right? Because if somebody has a mutual fund problem, they think, well, if we can fix the PFIC rules or something like that, then the problem goes away. No, no. I mean, there's all kinds of other problems for other people, right? The only way to solve this problem is for the United States to change their definition of tax residency so that
Mm-hmm.
they're not taxing people based on circumstances of birth. I mean, seriously, how idiotic is this?
I wish.
This is the
And
21st century. It's practically medieval. And
and
it also assumes that U.S. citizenship is really a property interest that the U.S. government has in you,
mm-hmm. It's
right?
true.
I mean, it's not like all citizenships are the same. I'm not saying that U.S. citizenship isn't a good citizenship, and I'm not saying that it doesn't give you opportunities, to live in the United States, which can be valuable. But it really has gotten to the point where it's a clear disability if you want to live outside the United States.
Mm-hmm. And a lot of people now are talking about how we're kind of guessing which country might be the next to implement citizenship-based taxation. Canada has talked about it a little bit. Parts of the EU have talked about it. Maybe Argentina. Do you have any theories on if that trend is accelerating and if other countries might implement citizenship-based taxation?
Well, I'll give you the answer first. I'll explain it. I don't think there's much of a chance that any of them will be stupid enough to do that. Okay. I mean, it really takes, I think a sort of blindness to what's going on in the world to do this type of thing. Now, here's where it's getting momentum is that, um, you got these. I mean, okay, for the record, if I'm anything politically, I'm an independent. I'm not particularly a political person, but that does not stop me from identifying many of the Democrats as a huge, huge problem, not only to Americans, but I think the world as a whole. So you've got this movement in the United States coming from people like Elizabeth Warren, this whole wealth tax thing. Now, understand that the wealth tax is predicated on citizenship taxation, right? Because, that means people can't escape from the United States, basically, other than renunciation,
Mm-hmm.
which, they're trying to ratchet that up as well. But you got to understand that, remember that citizenship taxation really is taxation based on circumstances of birth. And what the only contextual meaning it has is to allow the United States to come into other countries and effectively claim income in other countries and people in other countries as either U.S. income or U.S. people, etc. So I don't think, and I think that once that's sort of exposed, I don't think that citizenship taxation is going to be the answer. But what I do think is likely to happen is tightening up residency rules, right? For what does it mean to be a resident?
Mm-hmm.
It's not easy to sever tax residency with Canada, for example.
Mm-hmm.
And Canada has a significant departure tax. It's nowhere near as brutal as the United States. Well, nothing could be. The reason the U.S. exit tax regime is so horrible is because there's really two systems. The first system applies to people who are living in the United States and decide they want to move from the United States, usually green card holders returning, to wherever they were from. And that system is a little more like Canada's because what that does is effectively, circumstantially, it simply looks at gains, usually accumulated more in the United States. But when this is applied to Americans abroad, understand that this exit tax is being applied to non-U.S. assets that were accumulated when the person did not live in the United States. Now, let me give you an example that is shocking. In fact, it's so shocking that I think some listeners may think I'm making this up, but I promise you I'm not. Okay, and it has to do with pensions. So, Americans are people, just like everybody else. I mean, they may have a more oppressive government. They may be subject to draconian medieval tax rules and assumptions of citizenship, but they are still people. And as people, what they will do is they may have careers outside the United States where they will build up a pension. So let me give you a tale of two people, okay? So person A will go back to California, teaches at the University of California as a professor, 35 years, has a pension build up. I'll just make up a number, $2 million, okay? Probably not that far off, actually, okay? But anyway. Now, same person in Canada teaches at the University of Toronto, 35 years, builds up a pension of $2 million. Now, the difference is this, okay, that the professor in Canada also happens to be an American. Now, let's say that both of them want to renounce US citizenship, okay? They both have net worths of about $2 million. They're both subject to the exit tax regime. Now, let's look at how the U.S. taxes those two kinds of pensions. Now, most people would assume, well, I mean, surely the U.S. must be taxing the U.S. source pension. I mean, that's where it was earned and not the foreign source Canadian one. No. Here's what happens in a situation like that. The University of Toronto professor is required to include, to treat as distributed, the full $2 million on a U.S. tax return on the day prior to renunciation. In other words, now understand, now this may not be a $2 million inclusion. Let's say it's 1.5, okay? But that's a $1.5 million inclusion of fake income. No money's actually been received. Tell me, would you like to have $1.5 million appear in your tax return in any year when you hadn't received any money? Wouldn't be so good, right? But let's contrast to what happens with the American one. One, okay, there is no income inclusion at all. Okay, they get to keep their pension on the understanding that sooner or later there's going to be payouts from the pension distributions. And at that point, we're going to tax that. But let's imagine that the person is also a Swiss citizen, okay, or can move to Switzerland and become a resident of Switzerland, okay, in some way or another. Now remember, after renunciation, the person is no longer an American citizen. Person moves to Switzerland, okay, now we look at the distributions. And under the treaty, okay, and under many of these treaties, basically what happens is the country where the person lives has the actual taxing rights over the distribution. So the bottom line is, what I'm trying to show you here is that the pension earned in Canada is basically subject to significant confiscation. The pension earned in America may never be taxed at all by America. So the bottom line here that people need to understand, even if they don't know the ins and outs, is that the United States is the only country in the world that not only taxes people when they leave the country and set up a life in another country, but actually taxes them far more punitively in ways they would never be taxed if they remained in the United States.
Because they're basically disincentivizing like offshoring as a U.S. citizen or earning outside the U.S. system, because they want people to be kind of investing in the U.S. system and transacting in the U.S. dollar. Is that kind of the idea?
I don't know that there is a clear idea. I think that that's possibly a justification. I mean, let's say Templeton Mutual Funds. You know, if you buy Temple, it's the same fund whether you buy it in Canada or the U.S. But if you buy it in the U.S., there's normal taxation. You buy it in Canada, it's a PFIC. I think it's basically, I think it's just a dislike and a distrust of anything foreign
Right.
to the United States. I mean, if you see the word foreign in the Internal Revenue Code, nobody can understand the Internal Revenue Code. But if you see the word foreign in the Internal Revenue Code, I guarantee you the word penalty is going to be within 5 words. And it's going to start at
So
$10,000.
there's the word foreign. There's going to be the word penalty. Is that what you said?
Absolutely. But you have to understand that when it comes to the U.S. tax code, anything with an F is a problem. F bar, FATCA. But it all has its genesis in the biggest F word of all, foreign. Okay? That's where all this stuff comes from.
It's funny. I mean, foreign earned income exclusion is pretty nice, though.
Um, you know what? Actually, it's nice for a certain group of people, okay, at a certain stage in their life. But you've got to understand that the foreign earned income exclusion applies only to a very narrow kind of income,
Mm-hmm.
meaning earned income. It will not help anybody who's living off investment income or anything, that doesn't clearly meet the category of earned income. And this is why even people who are able to use the foreign earned income exclusion, say in Canada, uh, well, I mean, I'm helping a person of very modest means right now in Canada renounce. I mean, she can't deal with the system, even though her work income can be excluded under the foreign earned income exclusion. It's all the other stuff that's such a problem.
Yeah, it's all the other stuff. And so when we were talking about how the expats are sort of the hardest hit, it's not the digital nomads, not the retirees, it's kind of the
It's the
landed,
immigrants who are the hardest hit.
yeah, immigrants or Americans permanently living outside the United States. We kind of talked about some of the issues in terms of, oh, they're going to tax you on your foreign home, they're going to tax you on foreign mutual funds, etc. We didn't. I know you said that you had a couple ideas for solutions. I feel like we didn't fully hash that out. And now that we're kind of into the latter half of the episode, maybe we could talk a little bit about what some of those solutions are for Americans that want to basically like live more or less permanently abroad. And I'll kick it off a bit. My understanding is that you should basically just continue to do all your investing and money making and payments and all that stuff in the States, even when you live abroad. So if you're living in Australia, you're living in Spain, whatever, I guess the idea is to keep your money in the US, invest in American houses, invest in American ETFs and all that, and just keep it all there. And that way it's just sort of much cleaner and just not even bother investing in that Australian stock exchange. Don't invest in that Spanish house, or if you do, structure it in a different way. Is that sort of the idea? Just like try to keep as much in the States as possible, and that way it's less of a headache.
Well, I think that works for a young person who's a digital nomad. Okay, um, I think that can work. Um, but let's look at somebody. Let's use Canada as an example. All
Mm-hmm.
right, who's trying to make a life in Canada. Um, Canada. I don't know if you know this, but has an extremely brutal tax system. Okay.
So I've
Uh,
heard.
yeah, it's also a tax system that has that has similar rules for foreign asset reporting and things like that. Now, I think that it may be that you know I mean, first of all, realistically, aren't we just talking about short-term Americans abroad? I mean, how can somebody move permanently to another country, with the idea of keeping their whole financial life in the United States? How would you build a credit rating, for example?
Mm.
I don't think I don't really think it's possible long term. I think that if you're going to do that, what you have to do is consciously avoid the things that are going to give you, U.S. tax and reporting problems. So you avoid, you invest only in individual shares, you invest in interest bearing notes, okay, only. You invest in real estate, etc. And those are the types of things that you have to do. If you have a pension plan, I mean, fewer and fewer people get pension plans. I mean, they may or may not be a problem depending specifically on the treaty and the country where you live. Probably not a big problem in Canada, Germany, or the UK, but a gigantic problem, in other countries like Australia as one, or any country with an older tax treaty. It's a
Right.
lot, it's really a lot of work,
But
and
all those money making activities, right? Whether it be buying the individual stocks or buying interest bearing notes, uh, what happens in that situation? I think like Canada taxes it first, and then you get like a tax credit, and then the US will take a look at it and see if they need to assess more tax on it. Is that how it works?
well, let's make up a very specific example. So you're imagining that you're an American and you get $100 of interest in Canada. Is that your question? How's it taxed?
Yeah, sure.
All right, yeah. So both countries, so all these countries are taxing based on worldwide income. That would be sourced to Canada.
Yep. So
Okay,
Canada will tax it
Canada
first because you.
taxes it first. Let's say that Canada taxes it at 30%, and then what happens is it has to appear in your U.S. tax return, and then if you're the tax that you would owe on that, okay, in the U.S. would be offset, all right, by the $30 paid in Canada.
Right.
Now, in many cases, the tax paid in Canada is going to be higher than the tax paid in the U.S.
Mm-hmm.
So the excess would go into a basket, which would be, uh, a tax credit carry forward.
Uh huh.
There are different kinds of tax credit carry forwards, as you might expect, for different kinds of income. So for investment income, you've got one basket. For earned general income, you've got another basket, etc. But I mean, that's in a general sense, that's how it works. Does that make sense?
Yeah, it does. I mean, definitely gets complicated fast, but I get it. So it's like if you with the way I've had it explained to me is if you live in a country that's higher tax than the U.S., you probably have nothing to worry about. But it's when you live in a country that's lower tax than the U.S., that's when you're going to owe more than expected, right?
I think that's part of it. Okay, but the way what you're talking about, the way it was explained to you, kind of assumes two things. Okay, the first thing it assumes is that the income is realized, you receive it at the same time in both countries. Okay, there's a matching. There's a matching thing, and the second is that they're actually taxed in the same way. Okay. Now,
Mm.
let me give you a scenario here for a minute, okay? And I'll show you why that doesn't always work, and why it's funny. You talk to accountants, many accountants, and they say, "Well, no, the tax treaty prevents double taxation." First of all, it's not the tax treaty; it's the individual country's tax codes. But I mean, let's look at that for a minute. Um, that is To the extent that that's true, that is the case when the income is characterized in the same way in both countries and is received at the same time. Okay? But let me give you a different example. But it doesn't, for example, it's not true. Well, maybe it is. I don't know. If you sell your house in Canada, you don't pay tax in Canada, you do pay tax in the US. Um, I guess that's not double taxation, but it clearly is an extra burden of tax because of US citizenship, right?
Yeah,
Uh,
no, I kind of get it. I guess it's hard to come up with an example, but it's like you get a distribution in Canada or something, and maybe in Canada it's considered a dividend, but then the U.S. wants to call it employment tax, and then maybe your credit doesn't count in the same way.
Well,
Like
here,
there's,
let me give you a real example. Okay, at the end of 2017, the U.S. created something called a transition tax. Now let's look at these Canadian-controlled private corporations. So people are accumulating money in these corporations. All right, it's not being distributed. It's not subject to tax in Canada. The U.S. comes along and says, "Well, you know what? We're going to pretend that you actually received 35 years of earnings. This is true, even though you never actually received it." So the U.S. imposes tax on that right now, but that doesn't affect the Canadian tax situation. So if that stuff is paid out later in dividends, then it's subject to tax in Canada. It's pure double taxation. Pure double taxation. And this is these what I would call deemed income events are becoming a bigger and bigger problem. I mean,
mm,
the bottom line is this, to keep this real simple. Okay, anybody who tells you that, somehow if you live in a higher tax country, that any taxes you pay in Canada will always offset your U.S. tax liability is absolutely 100% wrong.
okay, cool. I mean, that's kind of our motto here at My Latin Life is don't live in a high tax country anyway.
Well, you know, I think again, most digital nomads are relatively young people. Generally, not all of them, but most of them. I think that works well at a certain stage in people's lives. It doesn't work well for, and also the word nomad means move around, right? Move around, move around. This does not work. This tax system does not work well for people who don't move around, but rather get roots in a place and try to, live their lives.
Yeah, and I think a lot of our audience is kind of uh, on like kind of shifting between being a digital nomad to being someone that wants to set up roots, because you'll do the digital nomad thing for 2-3 years, who knows, but eventually every one of these digital nomads are like, I should just buy a house in Mexico, I should just get residency here and there. And people do want to start setting up a base, and actually what we talk about a lot is setting up multiple bases, getting residency in like 5 countries, right, stuff like that. So I could start hitting you with some of the things that we talk about, and maybe we could get your feedback on it, because you
Sure.
probably don't get asked things like this too much. But you're obviously familiar with what a territorial tax country is, right?
Yes.
And so what we typically say for Americans and non-Americans is that instead of living in a residency-based taxation country like Colombia or maybe Mexico, that if you want to reduce your tax burden, to live in a territorial tax country, right? It might be Panama, it might be Nicaragua, it might be Paraguay, things like that. Um, and then if you are American, you'd probably end up keeping most of your assets in the States, and then just living in that territorial tax country. And you're probably going to trip a lot less bugs or a lot less of these weird double taxation rules than if you were living in a high tax residency based country.
Um, I don't think it's the fact. You see, because of U.S. citizenship taxation, the fact that it's territorial, I don't really think matters, right? I mean, I want to make sure we're talking about the same thing. So, a territorial tax system is a system where a country taxes only income earned in the country, right?
Right.
Okay. All right. So, uh, Singapore, Hong Kong, these are territorial tax systems, right?
Yep.
Okay. So the question is, how would that help an American under a citizenship tax-based system?
Yeah. Basically, like, do you think at very least that uh, Americans that choose they don't want to they know they don't want to live in the US, right? And they want to live somewhere else. At very least, choose a territorial tax country such as Hong Kong or Singapore, such that you're probably going to have a much shorter tax return than if you were living in Spain or Canada and you were dealing with all these like crazy double taxation rules uh, because a lot of your money might not be earned locally in Singapore, so you might not be
Okay.
having
All right. So
to.
your point is that if you live in Singapore, Singapore won't tax any income that's not earned in Singapore,
Right.
and therefore that makes life easier. Well, what it means is that in Singapore, you're not dealing with controlled foreign corporation rules, and you're not dealing with, for example, having to report income from China or somewhere on a Singapore tax return. So it's going to make the tax return in Singapore easier, right? I think we would agree on that.
Mm-hmm.
Um, it's not clear to me how it makes the U.S. tax return easier, though.
Yeah, well, you do get the foreign earned income exclusion, the foreign housing credit potentially, and so you're basically doing. It's not much, but it's something, right? So at
Well,
very least,
that's a feature, though, of residency-based taxation. I mean, look, okay, I agree with you that a territorial system is far better than a worldwide system for anybody, okay? And so, I mean, there must be some sort of, blowback for Americans on that. So, I mean, that's obviously a good thing. But what I think is that as long as Americans are subject to the citizenship taxation regime, and they live outside the United States, and they have income earned outside of the United States, if it cannot be excluded under the foreign earned income exclusion, I think they're going to have problems.
right? But at least Canada won't try to tax it or whatever if they were living in, like, let's say you were like living in Canada year round, working for an American company. Canada would try to tax that income as well, right? Because they'd say, "Oh, you're a tax resident of Canada as well." Blah blah blah. We got to tax your income, even though it's like kind of American source, it's kind of Canadian source, is a bit gray, right?
Well,
But
okay, so the situation is you have an American living in Canada with income sourced in the U.S., or what is it you're talking about?
yeah, yeah, exactly.
Well, the American in Canada is a tax resident of Canada, right?
Mm-hmm.
Okay. So what is going to happen there, I think, is that the income is going to be sourced to Canada because that's where the work is done.
Right.
In other words, it wouldn't be now the income is sourced to Canada, but that doesn't get an American out of American taxation. What it means is if the income is sourced to Canada, that you pay tax first in Canada, and then you're going to use that as a credit against the U.S. tax.
Correct. And now let's say that that person, instead of choosing to move to Canada with their family, chose to move to Singapore or to Bahamas or to Panama, right? Then they wouldn't have to deal with that Canadian level of taxation, generally speaking.
This is the same person who does not move to Canada but moves to one of these other countries.
Yeah, exactly. Let's just say you're making half a million. You're like, let's just say you're American. You're a uh, software engineer. You're making $500,000 a year working for an American company, but you choose to live in Canada because you love the Rockies or you love the Maple Leafs, right?
And you do the work in Canada.
And you do the work in Canada, you'd be paying Canadian tax on that 500K, right?
Yeah. Yes.
And so, kind of what we're advocating, and it would kind of be the same situation in Colombia or Spain, any residency based taxation country that you choose to move to. Because a lot of Americans might say, I want to move to Colombia, I want to live there year round. Well,
Yeah.
you're going to have that same situation of Colombia saying, no, this is you're a Colombian tax resident and this is Colombian sourced income.
Oh, for
We're going to,
sure. Sure. The internal revenue. I mean, maybe this will help, right? The Internal Revenue Code, the U.S. Domestic Tax Code, specifically sources the income to the place the work is done,
mm-hmm,
right? So anywhere an American goes, right, that's going to be income that's sourced outside the United States, sourced,
mm-hmm,
foreign to the United States, right?
mm-hmm,
So To be an American, okay, you're always going to have this problem. You cannot escape worldwide taxation. Um, to be clear, and I think this is an important point, as convenient as the foreign earned income exclusion is, it's you're still a U.S. tax resident. It's just that they say, well, in this particular case, we're going to allow you to exclude this from your tax return, right?
Mm-hmm.
Like the bottom line is that I think the tax situation for American citizens who venture outside the United States, it differs a little bit from country to country, depending on a number of things. But they're still subject to the Internal Revenue Code no matter where they go, right?
Yeah, the IRS is certainly unescapable. I guess the what I was trying to get you to elaborate on is that maybe you could reduce the burden of paperwork or taxation from uh, the new country that you migrate
Possibly.
to.
Oh, absolutely. But that's just a function of the new country's tax code.
Exactly. And so what I was kind of trying to ask you about was like, you could potentially move to a new country that has a more favorable tax code as opposed to one with a more, uh,
Absolutely. Move to the Middle East, move to Dubai. Okay?
yeah.
There's no income tax there at all. Then you use the foreign earned income exclusion to exclude up to about 100, what is it, $120,000.
Yeah, exactly. And so in that sense, let's just say, moving to Canada versus moving to Dubai could, that person's going to have a very different tax bill at the end of the year, even though they're both subject to U.S. tax.
Oh, absolutely no question about that. No question about that.
Yeah, that was kind of so because we were just talking about like what are some solutions that Americans can kind of implement, right?
I mean, basically, what you want to do is, if you want to sort of see the foreign earned income exclusion as your tax savior, so to speak, uh, that just means that the foreign income is going to be excluded from the U.S. tax side. So you have to make sure it's not taxed where it's earned.
Yep.
So, the Middle Eastern countries don't have income tax. Uh, there are plenty of countries in the world with lower taxes than the United States. I mean, I don't have a list of them specifically, but there are.
Yep.
Um, so, yeah, sure. I mean, that can be done. Um, you know, thing is, though, that I agree it can be done. But very often, when you go to places that have low taxation, you have a lot. It's kind of made up for in other kinds of costs, right? But anyway, I agree with your point. I agree with your basic point that you can do that.
Hmm.
And this is a good way. I mean, look, let's say somebody's got a whole whack of student loans, okay?
Hmm.
Graduate from college, university, you got a couple 100,000 student loans. This is a problem, okay? This is a problem. And you're not likely to be able to pay that back with a high tax job in America or Canada. You'd agree?
Takes a while.
Yeah, I'm longer than you want it around. So what you could do, get employment in Dubai, right, or somewhere like that, where you can use the foreign earned income exclusion and not be taxed there. And I mean, I have personally talked to many people who saved up an awful lot of money because of that, and I think that's a good idea. I mean, particularly if you have, as many people do, these debts, right, from school.
So yeah, just help people save faster because they have a lower tax burden.
Well, I think that debt is the cancer of life. Okay,
Yeah.
and for example, I used to do all this, law school counseling and stuff, and some of these forms of education are getting so expensive. I don't know if they're worth the risk of the debt. Okay, um, so this is a great way. maybe you could write an article on your website. You know, how to use the foreign earned income exclusion to pay off your student loans.
Yeah, we definitely talk about it. Um, and so, John, for you, when these Americans abroad come to you, I guess everyone's situation is a little bit different, but there must be like a couple different funnels or like categories of how you help people. Because I imagine you either help people renounce or you help people just get their damn taxes done, even though it's complicated, or you help them like renounce, but then also maybe reduce their taxes to zero by like moving offshore, or like what are some of the categories of people that you find in terms of who they are and what their goals are?
Um, all of the above, all of the above, and it really correlates to, I think different stages of life. I mean, first of all, to be clear, I'm not a tax preparer. Okay, I mean, I work with tax preparers, to get these things done. So, that is not what I do. The way I think about what I do is help people transition to whatever stage of life they're trying to do.
Hmm.
And for a lot of people, I mean, there's a lot of everything out there, right? I actually do not encourage younger people to renounce U.S. citizenship because, this whole thing is so crazy. I think it's got to change. It's got to fix itself. I don't know when that's going to be exactly, but I think that a lot of these people probably can wait. And remember that those who are dual citizens from birth have far less incentive to renounce U.S. citizenship, right? Okay. Um, a lot of people moving into retirement feel the need to renounce, and this can be for a variety of reasons. A lot of it is just pure, I think fear and stress. The compliance community generally, accountants, some lawyers, I think, have done a very, very good job of creating just an overwhelming sense of fear. Because there's so many moving parts, and a lot of people are, they're just frightened out of their American citizenship. I mean, I meet them all the time. It's true. It's tragic, but it's true. And yeah, I help people achieve what they want to achieve, and if renunciation is what they want, that's what we do, right? And sometimes that involves planning, because of their net worth and things like that. Um, I work with a reasonable number of uh, digital nomad types, younger people who are just trying to kind of move around, and mostly what they want is just a better understanding of what's going on, so they don't have to worry about stuff so much. A big part of what I do, though, is green card holders who basically have had a career in the United States or a partial career, and their job is they want to move back to wherever they came from, but they find they're subject to this really brutal U.S. exit tax regime, and these people can be a lot of work, right? But I mean, I help them, essentially get out of the United States without losing their shirt, because of the punitive nature of this stuff. What else? Um, and I work with people all around the world, and they're very different conversations depending on where you are. I mean, people in Australia are living under a tax treaty that's just so misaligned with the realities of the modern world that there's a tremendous degree of frustration. I think fear in Australia. Um, in Europe, you've got the problem of the basic identity card has a U.S. place of birth. It's a lot harder for them to not be noticed as Americans. So there's that. In Canada, the way that people run their lives is, I think, a higher proportion of them, have controlled foreign corporations, which is a big problem. So a lot of these are country specific issues.
Hmm.
But I can tell you, it's very interesting. I mean, I never would have imagined that, this stage of my life, I'd be doing this kind of stuff. I mean, this whole thing just sort of erupted, 12, 15 years ago, right? As a big problem.
What's the current wait time to renunciate? I know it's like often like 2 years or something.
2 years would be extreme, but I would say that in Canada it's a year to a year and a half. It is clear that in the UK long. It's long, probably 8 to 12 months. There's some place in Europe it's less. There are a few places in the world where where it's even less, but it's a lot of work, to get to those kinds of places. And they all, by the way, some of them will only take appointments from people who actually live in the country. Okay, in other words, you can't fly there.
Hmm.
Uh, the ones that have high concentrations, though, of Americans, it's going to be a long wait list. Like Toronto uh, is a year and a half. Montreal, I'm noticing, is a year and a half. I've had a number of people contact me this week with dates they've gotten to renounce in, their assigned dates in July and August. So that would mean for them it would have been, a year to a year and a half wait.
Hmm.
It's all over the place. And the renunciation procedure differs depending on where you are in the world as well.
And we also probably should mention, I don't think we mentioned that to renounce, you need to have a second citizenship. You need to have some second passport, right?
Well, you're not required to as a matter of law. Okay, but you'd really be an idiot. All right. I don't want to use that kind of language. I think it would be very ill advised. Okay,
To be
to
stateless. I heard they won't even allow you, like they won't allow you if you end up being stateless.
no, they will. They will. Okay, there's no provision in U.S. law that requires somebody to have a second citizenship. That said, they work pretty hard to make sure that people do have second citizenships. But there's nothing in the law of renunciation, if you were to read the statute, that requires that. I mean, I certainly you know, would not advise somebody to renounce unless they had a second citizenship. And, honestly, I'd probably want to know what the second citizenship was. I mean, I agree that U.S. citizenship is a problem, a big problem. I agree that it's inconvenient, but it is better than than some other citizenships out there. Okay.
I think one of the big factors is if you'll continue to have access to the United States, either via the ESTA program or if you're Canadian, you'll have visa free access. Because some people, like some Canadian clients you probably have, maybe they have grandparents in the United States, maybe they have some sort of business interest, and they say, look, I would renounce, but I need to be able to go see my grandparents. And so they need to, they kind of need that. They need to know that even if they renounce, the U.S. is not going to treat them bad, and if they still have Canadian passport or an ESTA passport, meaning like EU or Chile or something, that they can still get into the States for short visits.
I have seen absolutely no indication that that's a problem at all. If you renounce U.S. citizenship, you're just treated as a citizen of whatever country you are of. Now, you know, Canada is not a visa waiver country. It's far better than that. You just show a Canadian passport, and that's it. Visa waiver countries are the UK, for example. And that's where you get into your ESTA stuff. But I mean, it's a little more work, but it's not a big problem. Although I would have to say that if you look at the ESTA form, it's pretty intrusive these days. Um, you know, it seems to me okay. Okay, maybe part of what we should talk about is who probably should not renounce. Okay,
Okay.
um, there's two kinds of people who should not renounce. And those are, first of all, those who are left with, who have a lot of U.S. income sources and or U.S. assets, because at some point people die, and you're a U.S. citizen. At present, you're not going to be subject to the U.S. estate tax unless you have assets of over about $12 million. That's coming down, but if you're a non-resident alien, the U.S. estate tax on U.S. citus assets kicks in as little as $60,000. Okay, so somebody who has a lot of investments in the United States probably should not renounce, or should be at least very careful with it.
Mm-hmm.
And the other people are the ones with large U.S. source income payments. Okay. Because when you become a non-resident alien, you're actually taxed higher on certain kinds of income, okay? So, this is a conversation that you have to have with your advisor. I mean, if you have no U.S. income sources or assets, I think it's a lot easier. The other thing I would say is that, people who want to spend a lot of time in the United States, I think probably should keep their citizenship. In other category, people who have been convicted of crime should keep their citizenship.
Mm.
Because if you've got a criminal record or something, that opens the door to being excluded.
Yeah, that's a good point.
So, I don't really, this is not one size fits all. And although, while recognizing and educating on the problems of living as a United States citizen outside the United States, while this is a big problem, and I think that many of them are far better off if they do renounce and probably are forced into it, there's very definitely a group of people who are going to be better off keeping their U.S. citizenship.
Mm-hmm. Yeah, makes sense. On the thing about the U.S. source payments, I think that's actually an interesting one that'll apply to our audience, because let's just say they think, okay, I'm a W-2 employee now, but my skill set, I could translate, if I could renounce and then just be a contractor afterwards for a U.S. company and just get paid as a contractor for my my video editing work or my software work, whatever. Could that work, like, or would that be actually even be like a higher tax payment? Or what are your thoughts on that generally?
Um, well, it comes down to where the work is being done, right? It's being done outside the United States. It's going to be foreign source income.
Mm.
Um, I don't have a great sort of one size fits all answer for that type of thing. Um,
Yeah, that's interesting. So let's just say video editor is the profession, right? You're just on your laptop. Um, you're working for a U.S. company remotely. You're video editing. You're making 100K. Um, Obviously, you're probably doing the foreign earned income exclusion. Maybe you're not, uh, but whatever. But let's just say, hey, I could just renounce I could renounce my U.S. passport, and I can just keep video editing till the end of time, and I don't have to deal with the damn IRS, right? And what you're saying is actually that would, even if you're getting paid from a U.S. company still for your video editing work, that would be considered foreign source. Like, the U.S. isn't going to come after that income. It's just
it's
like the
foreign source income.
it's foreign source.
Yeah, I
Like
mean,
the
I think
payment originates in the States, but the work was
the
performed
payers in
elsewhere.
the United States. Let
Yeah.
me give you a little bit of help here, okay? If you were to just pull up the Internal Revenue Code sometime, or just Google source rules, Internal Revenue Code, okay? You'll actually
Yep.
see, some sections that say, uh, income and source where the work is done, or if U.S. real estate is sold, then that's going to be sourced to the U.S., etc.
Mm-hmm.
And sometimes those rules are modified by treaties. Okay, so it depends what country you're in.
Mm.
as well.
Nexus to the income.
And
Okay.
another thing I want to add on the treaty thing, okay, is this that all U.S. tax treaties have what's called a saving clause. And the effect of the saving clause is that U.S. citizens generally don't get the benefit of the treaty, okay, except for in very narrow circumstances. So U.S. citizens need to think more in terms of the internal rules of the Internal Revenue Code and less about the treaties. If you want treaty benefits, you need to renounce your citizenship.
Okay. And just coming back to renunciation, so let's just say um, most people don't have the pleasure of living in beautiful Toronto, Canada, like yourself, but they might. I think a lot of people are thinking, and I get DMs all the time saying, I want to pick up a CBI passport, a citizenship by investment passport from St. Kitts or from maybe Malta if they're super rich, and then with an eye to potentially at least have the option to renounce my US citizenship in the future. What do you think about this strategy of kind of like investing in second passports and then using that as a vehicle to eventually renounce?
Well, I've worked with a lot of people who've done just that. Well, what do I think of it? I think it works. But I would say the same thing again, right? That I don't think renunciation is for everybody, and I do think it needs to be weighed relatively, fairly carefully here. You've picked up a passport from one of the Caribbean programs.
Mm-hmm.
Um, I mean, it definitely gives you a second citizenship. I'm not completely up on the travel benefits it gives you. A lot of people who, in my experience, who pick up those passports will also pick up a residency somewhere,
Mm-hmm.
with a view to leveraging that into citizenship. But those are getting harder to get now too, right? For example, the Golden Visa program that was just killed in Portugal was, I believe, a path to permanent residency, wasn't it?
Yep.
But the digital nomad visa, I don't believe is. Am I
No.
right on that?
I think the D7 one is, but I don't think. But digital nomad visas typically don't lead to
Yeah,
permanent
right.
residency.
So, I mean, the thing is, you got to be very careful with this stuff. Okay. There's a great personal injury lawyer many years ago. His name was Mo Levine, the greatest trial lawyer ever. And, he used to make these closing arguments in front of the jury. And he'd always end up saying, it's not what you take from somebody, it's what you leave them with. And I think this does have some applicability here. Okay. What are you left with, right? In terms of mobility and stuff like this. Now, if I understood correctly, I was listening to a seminar this morning. I'm a member of something called the Investment Migration Council. And
Yep.
I think what I heard, the part of the discussion was that a number of European countries are considering changing rules to make holders of various passports around the world less mobile within their jurisdictions. Um, I wasn't totally paying attention, but that's what I thought I heard. But my point is, there's no reason they can't do this. So, I do think citizenship matters. I really do. Um, I also think that U.S. citizenship has value, but for some people, they just cannot maintain it. I mean, it's really that simple. Um, I think that people should be thoughtful about any CBI programs they get involved with. I mean, it's nice to have a passport, right? But is it really consistent with other things you're trying to do? If all you want to do is renounce U.S. citizenship, I think that's fine. It works. Um, there's been tremendous shakeup in the world of second citizenships, and I think the last year or so, right?
Yeah, for
The
sure.
industry, there are far fewer options than there used to be. Isn't Malta either done or on the way out on that?
Malta's still kicking.
They are they? Okay. All right. But in the last few months, okay, these weren't necessarily second citizenships, but Ireland has killed their program.
Yep.
Portugal killed part of it.
Yep.
etc. I mean, the trend on this is to make it an awful lot harder. And, the reasons for this are kind of interesting. What they're recognizing is that in some cases these programs are actually harmful to the longtime residents of the country, right? You sell off real estate, et cetera, et cetera. The Airbnb thing, the whole COVID thing, interestingly, has made people more mobile.
Mm-hmm.
That seems to have supercharged these digital nomad visas.
Mm-hmm.
So, I think what we're seeing is a certain uneasiness with this whole concept of, being able to sort of buy your way into a country, whatever. What I do think is this, that there are more people who are able to get second citizenship based on ancestry than I think know about it.
True.
And, anybody can get, Italian or Irish citizen, absolutely should. Absolutely should. It's amazing how people will not do this. I mean, I've had this conversation with so many people. They don't want to do it. I don't have time. Are you out of your mind? Uh, people will pay $1 million for a U.S. green card. I think it's a huge mistake to do that. I think they should come to the U.S. in another way. There's a reason it's called a green card, kryptonite, right? But the point is that people will pay lots of money, for the kinds of opportunities that are available to a lot of people for free. And I'll come back to my personal view of the postgraduate work permit in Canada. Why wouldn't a middle class American family, wherever, in upstate New York, they know where Canada is, why wouldn't they just send their kid to college, university in Canada, you know, get the probably pay less or possibly pay less, but, it's setting them up to be able to get Canadian citizenship, or back where we started, shouldn't people consider having their kids born in Mexico?
Mm-hmm.
I think that these are very prudent things. And while we're talking about renouncing U.S. citizenship, it's also, at least I believe, it seems clear to me that, generally speaking, the value of these citizenships is becoming more clear and I think even greater, because of, we're living in such an unsettled world, right?
Yep. Yeah, no, I agree. This is good citizenship talk. This is a lot of what we talk about every day at My Latin Life on the Twitter.
Yeah, no, it's good stuff to talk about. And I think that, if you were to go to my Twitter feed, um, today I put up something. I found this really, really interesting conference on, uh, sort of wrongfully assigning or attributing citizenship to people. I thought was interesting.
Okay.
Have a look at it. I mean, that's sort of looking at the whole citizenship thing from another point of view. But the bottom line is this, okay? For most people, they go through life and citizenship, they don't even understand what it is. I mean, 98% of people in America equate citizenship with residency.
It's true.
That's why they don't understand citizenship taxation, because they think, you're a citizen, you live in the United States. That's what they think. All right, and this is why it's hard to have this kind of discussion. But I will say this, and this is a direct quote from me out of somebody I was working with today, is that once citizenship problems start, okay, there is no small problem. It's impossible. And to the extent that you're able to get some of these things for little effort, Ireland's got more citizens living outside Ireland than in Ireland.
Mm-hmm.
or Italy or whatever. I think people really need to do that. That's where I think there needs to be more emphasis and less on, buying these, various, Caribbean programs. And I'm not saying they don't have value. I'm just saying that, uh, probably Irish or Italian citizenship is probably better.
Hmm.
But that's not. I'm not saying anything particularly controversial, right?
Yeah. And so when it comes to residency, you mentioned that you're seeing a lot of your clients are interested not only in the CBI, but also getting second residency. So in your part of the world and with your client base, what are you seeing as some of the most popular second residency options?
Um, I think I don't know about popular. What I've seen is people I know reasonably well who've moved to Portugal, who've moved to Mexico, um, probably Spain. Just people I'm not thinking about right now. France is a great place for Americans, by the way, because of an aspect of the tax treaty people don't know about.
Oh, I didn't know that. Tell us.
Oh, this is unbelievable. It's incredible. Well, basically, okay, if you're a U.S. citizen living in France, as a general rule, you're not going to be taxed on U.S. investment source income.
What does that mean?
What it means is that your neighbor, you can have the same, that your neighbor, okay, he's a French citizen, has the same investment in portfolio that you do, is going to pay higher taxes living in France than you as an American citizen. What it does is it may, in some respects, it may lower the tax on investment income to very modest levels. France has very high taxes. Okay, you may or may not be aware of that. Very high taxes. Um,
Hmm.
I don't know why anybody would live in France unless they've always lived in France, unless you're an American retiree, in which case you can waltz in, show your U.S. passport, and get tremendous taxes.
That's pretty cool.
Well, it is, but you've got to be able to make that kind of residency option work. So it's not one size fits all, and a lot of people put almost no thought into it because I know people who are so upset about the tax situation in Canada that all they're doing is just severing tax residency with Canada, paying the departure tax, and they hardly care where they go. As long as there's a way to fly somewhere where they need to do business or whatever. Um, so global mobility is interesting. I
It is.
really
It is
enjoy
interesting.
helping people achieve these things. I mean, it's fascinating stuff. Um, but I don't think that people, the grass is always greener on the other side of the fence. I think they always undervalue what they have. Particularly if it's, oh, I don't know. Well, living in Canada, I think is undervalued. Um, Canada is actually a great place to live if you've got a lot of money. No, seriously, it's unbelievable. I mean, you get taxed brutally on the way up trying to get it, but once you've got it, I mean, it's a good place to live.
Yeah, that's fair. I think a lot of the value is in diversity and just diversification and having multiple residencies, multiple passports, having basically having a plan B.
Okay, so yeah, okay, so yeah, I mean, I agree. Or as people like, I mean, a lot of the people who spent are sort of full time advocates of this stuff. Um, they characterize these things as insurance policies, right?
Yep.
And I agree. I agree. I think they really are. I think that And this is why I think that people, there's something about the human condition where if it's complicated and expensive, it must be a good thing to do. If it's simple, oh, anybody can do that. So why would we bother? I have an opposite view of this. If it's simple, you should do it. Okay? If you can get citizenship by ancestry, or if you can, you know, do your schooling, whatever, in Canada. These are great investments. But it's
Yeah.
hard to get people to, appreciate what's simple. I mean, every year, these companies, like you presumably know companies like Henley and that, right?
Hmm.
Okay. So, Henley and the IMC, the investment money, they have these huge conferences, okay? And I've been to these conferences, right? I mean, as I told you, I remember the IMC. But there's always this focus on all this, these big, expensive, elaborate things. And for U.S. citizens, they're a lot harder to access because of the tax problem. They focus on EB-5 programs. I think anybody who'd go to the U.S. on an EB-5 thing is certifiably insane. But they don't. That's just my. I emphasize that's my opinion, and therefore can be wrong. But I have, if you look at the tax problems, I mean, you can see why.
So you think that some of the IMC organizations and people there, they're focusing on the wrong parts of global migration?
I don't think they're focusing on the wrong parts, but I think that it would be worth devoting more time to things that are easily available, like citizenship by ancestry. You'd almost get the feeling it doesn't exist.
Right, because they don't want to. It's not like lucrative for them to help people with the layups.
Well, I guess that's true. I'm sure that's true. Um, yeah, okay.
That's why they don't really
Maybe
talk about
you can do
Mexico
that.
and Paraguay.
You can do that, and in your group.
Yeah.
Um, I think there's definitely truth in that, but I'll tell you also where there's a very, very serious weakness in the industry. And that is that, it's one thing to talk about, you can get this residency program or this citizenship. But once you've got it, you've got to figure out how to actually get there. Okay. And often, if the issue is tax, that involves severing tax residency with a high tax place. Maybe the United States, maybe Canada. Spain has exit taxes now. Japan has exit taxes. Australia has exit taxes.
Yeah, they talk a lot about how to get the new thing, but not about how to exit the old thing.
That's right. That's right. And that's usually the bigger problem. Okay. It's a gigantic problem. And I think another area of emphasis has got to be, you go to these countries, what kinds of treaties do these countries have with other countries, including tax treaties?
Hmm.
Right? And I think that a lot of people, not so much in your groups, my sense is, I don't know you, but my sense is you're dealing with a younger demographic. Um, I may be wrong, but that's just my impression. But for people with are sort of middle class, middle age, who have started to acquire assets, they've got to figure out how to get how that stuff is going to interact with this kind of move.
Yeah, that's true.
And there are. I mean, I can't tell you how many times I've received a call from somebody who moved to Canada that taxes anything and everything. I mean, Canada and the United States are probably the world's top two, confiscatory tax systems. Okay, for different reasons. Okay, I mean, uh, it's like they're like the center of the tax axis of evil. Okay, um, and this is well known. I think, in general, it doesn't mean people don't live in these places, but it is a reality. But people have got to spend more time trying to figure out how exactly they're going to facilitate these moves.
I
And
100% agree.
And a lot of people, they pay very significant departure taxes to leave Canada. We've talked about the U.S. exit tax. Well, Canada invented the concept of the exit tax. I believe it was the first country from, in 1996 that had an exit
Oh
tax.
wow. That's
Yeah.
crazy. Speaking of exit taxing or exiting, we're coming up on time. Actually, we got less than 60 seconds. So, John, do you have any final message that you want to share with the audience? Of course, I'm going to link up all your websites and everything in the show notes.
Oh, I think try to determine what makes you happy in life and focus on that, and then the rest will fall into place.
I like it.
Too short for you? I'll leave it at that.
No, I love it. I love it. This has been a super valuable episode. Another episode of the My Latin Life podcast. Again, our guest today was John Richardson, expert for U.S. citizens abroad. Thanks again, John.
You're very welcome.